I'm Jessica Inskip, the Director of Investor Research at StockBrokers.com, and you're watching Taking Stock.
Counting down to the close, everyone. It is Tuesday, August 4th. This is Taking Stock. I'm Kristen Scholler down here on the floor of the New York Stock Exchange. We got a lot of action moving markets today. In fact, the Dow and the S&P 500 at new record highs on hopes of a potential U.S.-Iran agreement to reopen the Strait of Hormuz. Oil tumbling below $80 a barrel when it comes to ICE Brent crude, keeping inflation expectations in check. Caterpillar posting record quarterly revenue in the second quarter. And we want to bring in the Einstein of Wall Street, Peter Tuchman, to break it all down. Peter, pretty good day here down on the street.
Spectacular day. It really feels like we haven't had a day like this. This is almost like the runway is clear. It's not even just sort of reiteration that the irrational enthusiasm over the market the last couple of days that have been strong. Today it's like fresh August money, and it's almost like, you know what, we've disengaged the war, and it's like people put your money to work in this. It's sort of almost like the president had promised this kind of a market, and so it's just the strength, the breadth of the rally is significant, the volume, we've had huge to buy on the floor all afternoon, so it's significant.
Right, so a volume like that would indicate conviction in this rally, right?
100%. It doesn't feel like just sort of a melt up. It feels like strong buying of people with some foundation to the buy.
All right, thanks so much, Peter
Thanks,
Tuchman. Let's send it up to that closing bell down here on the floor of the NYSE. The market set to finish for trade in what is the second official session here in the month of August. CMC doing the honors. Everyone, let's take a look. We got a lot of happy campers down here on the floor of the New York Stock Exchange. A big crowd, of course, for the close, indeed. And let's take a look at the tape. The S&P 500, yes, finishing at a new record high. The S&P above 7,700 for a gain of 1.8 on the session. And we see the Dow Jones Industrial Average higher by 1.7%, above 54,000. The NYSE Composite up 0.9%. The small cap Russell 2000 again outperforming for a second straight day, up 1.9% here in this second official session of August when it comes to trade. Joining me now with more to parse through all the tea leaves here in the market is senior market strategist for the NYSE, Michael Renking. Michael, come on in.
Hey there.
Pretty strong start to August. What do you make of it?
Yeah, blue skies, sunshine, a lot of green on the screen, and new all-time highs pretty much across the board.
What is fueling this rally?
Yeah, there's a little bit of everything, right? So, you had kind of the news coming out of the Middle East this morning, right, as we're looking for a potential diplomatic resolution to that situation. But then we've had a positioning reset, you know, with shades of what we had seen at the end of Q1, right, where you had investors get a little bit concerned. We had this big momentum unwind throughout the month of July, where you saw tech, pretty much across the board, under pressure, right? And then we've had this phenomenal earnings season yet again. So if you look at Q2 earnings, year-over-year earnings growth rates are about 50% on a year-over-year basis. Now, some of that is kind of comes from the gains in the marking of Anthropic positions at Amazon and Google. But even if you remove that $150 billion mark, we're still up about 30% on a year-over-year basis. So, we're seeing strength pretty much across the board, and you're getting this tech trade, the bid is back in that trade after the clearing event last Thursday.
Yeah, it's pretty impressive. Obviously, earnings are fueling this. Hopes of a deal with Iran, oil prices falling, helping indeed. What about the economic data? What is that telling you right now?
Yeah, look, so the economic data has continued to be resilient. Right, we have the big jobs number on Friday. Markets are looking for about 100,000 jobs to be added. The unemployment rate to sit at 4.2%. We haven't really seen any cracks in the labor market. We did have a little bit of a weaker jobs report last month, but markets expect us to bounce back from that. This week we got the ISM manufacturing, which accelerated to the fastest level since 2022. So we're seeing an acceleration in the manufacturing data. Right, we obviously are seeing kind of the strength from all the data center construction, which is very much just kind of driving not only the economic data but the earnings backdrop, right? So all things look pretty solid. The question remains inflation, But as you kind of you see oil prices moving lower, and if we do kind of get ourselves out of the quagmire in the Middle East, right, we could see some of that inflation data start to move lower in the coming months.
Is this typical August action that we would see in the first few trading sessions of this final month of summer?
5% in the first couple of days. Not typical trading action. We're not seeing kind of the summer doldrums that you would sort of expect. I think a lot of that comes back to kind of the positioning heading in, right? So you really cleared positioning, and then from a technical perspective, we just broke out of a trading range that we've been in since May. So 7,200 to 7,600 roughly in the S&P 500. If you just take the measured move of that, right, that measures out to about a move to 8,000, right? So another 2 or 3%, to the upside from where we closed today.
Yeah. It was interesting, Peter Tuchman, who's also been down here for decades, was telling us earlier that he sees strong volume these past 2 days. Are you watching that as well? And to what extent does that impact conviction in the rally?
Yeah, absolutely, right. You're definitely seeing kind of strong volumes, as we're moving higher, right, which shows that there is a commitment to the strength, right? And that commitment to the strength is not just happening, within one sector. Tech was very much the leadership sector today, right? But you're looking across the board, and then the underlying areas where there is a little bit of weakness in markets is your defensive areas like consumer staples, utilities, right? So you are seeing kind of investors position for a risk on further upside in the market.
Yeah. Finally, the next Fed decision mid-September. Any expectations? Might be too early to call, but we'll see what the data says, right?
Yeah, I think we're going to have to see what the data looks like. We're going to see where oil prices are, right? The Fed is very much beholden to that data as we move forward. If we do see a reacceleration in the inflation data, it's going to be hard not to move at that point.
We're watching it in real time down here on the floor of the NYSE. Michael Renking is Senior Market Strategist at the NYSE. Michael, thank you as always.
Thanks for having me.
All right, everyone, let's take a walk here. I'm going to come around this way, and we're going to do a side-by-side walk today. We want to take you down. Hello. There you can see. We're going to take you down to a few stock trading posts, in fact, and we'll break down some of the numbers and why these stocks are moving the way that they are on the session. Of course, Michael was talking to us a bit about the economic data, ADP numbers out tomorrow. That's going to give us a good sense of private sector hiring. Thursday, we'll get those weekly jobless claims. Friday, the all-important non-farm jobs report will be out. And this data could impact, of course, the path forward for the Fed's next decision on rates in September. Let's take a look up here at some NYSE notables. In fact, we see Wayfair on the move today. This is the stock that ended the session up almost 30% after its earnings report. The online store for furniture posting its strongest growth in the U.S., along with its best free cash flow since 2020. On top of the double B, Wayfair also issuing upbeat guidance for third quarter sales. And Voyager Technologies, Howie, our cameraman extraordinaire, is going to move over here. That stock higher by 20% today. Also on the move after earnings, the aerospace company posting a double B with 50% sales increase from the first quarter and raising its full year revenue guidance, seeing record quarterly bookings as well. All right, pretty strong day down here on the floor of the New York Stock Exchange. And at that, we do want to take a look here at this next package, because J.D. Durkin spoke to Applejack, an Apple brandy maker, Lard & Company, to hear about the company's 250th anniversary. Coincides, of course, with 250 years of America. Let's take a look.
It means a lot. Like I said, our history has been intertwined with America's history. So we take great pride that we have been able to survive and endure right alongside the country. Whether it be through the world wars or prohibition, all up until recently COVID. We have just kind of stayed steady and determined like our country has. And to celebrate that, we wanted to have a special release that really marked the pinnacle of the celebration. So we released a never before 13-year-old Apple Brandy, which is the oldest age statement that we've ever released. And this is what I have here right in front of me, bottled at 56% ABV in celebration of the 56 original signers of the Declaration of Independence. Holy cow. It's a 13-year-old Apple Brandy for the 13 original colonies. and we only bottled 1,300 bottles, so about 100 bottles per original colony. So they're in very limited demand, and once it's released and bottled, we'll never do anything like this again. So
how long did it take you all to plan to do this around America's 250? This isn't something you just decide in like the month of March, be like, we're going to do this for like the biggest anniversary the country's seen.
we probably started thinking about it at least 2 years ahead of time.
Yeah.
But about a year was really when the wheels and cogs started to go in motion. Not everything went according to plan, but we got it out just in time, and the feedback has been incredible from all of our fans and the press.
And you're not just selling a drink. The way I think about you and your mom and your family, you're really stewarding a unique piece of American history. It's one of the many things I love about Laird so much. How do you balance preserving that legacy and at the same time running a very modern business?
Mm-hmm. That's a great question and a very hard thing to do. That was one of my biggest challenges coming into the business, but it's a challenge that every generation before me has also had to deal with. My mom had to deal with the shift in consumer preferences away from brown goods. So she had to endure that storm, and she did that by making new products in our portfolio, updating some of the labels and packaging. But in terms of what now I'm tasked with and following up with my mom, we're both working hand in hand. But like you said, keeping that modern edge while still remaining true to ourselves. And that's the most important thing about us, is the history we have and the heritage. It's something that brands wish they could make up, wish they could purchase. And we'll always have that. And we always strive to stay true to ourselves. We try not to chase trends too much. We try to stay true to ourselves and think decades from now on what can set us up for the future generations, instead of making a quick buck in a year or two.
Is there a way that a brand as old as yours, almost 250 years old yourself, are you using artificial intelligence? Dude, I would not be doing my job if I didn't ask some AI question.
That is a good question. We're implementing it here and there. I mean, we're a very small team. We have about 35, 40 employees right now. So AI does give us capabilities of creating efficiencies and just giving us an edge on like synthesizing data and finding where we have opportunities in different markets. So we're trying to use it where we can, but at the same time, we have a lot of processes in place, especially on the distilling side, where like if it's not broken, we don't fix it.
Welcome back to Taking Stock, everyone. I'm here at the FinTech TV set, and joining me now with more in the digital asset space is Cameron Neely. He's banking and capital markets lead for Layer Zero. Cameron, welcome.
Thank you so much.
Let's start by getting a sense of the state of the market from your view.
Yeah, the state of the market from my view is, firstly, we hit all-time highs in the traditional markets, but from a digital asset perspective, to really answer that question, we have to rewind 5 to 6 years. 5 to 6 years ago, we saw this explosion of different blockchain ecosystems, and of course, blockchains are just immutable ledgers that can help transfer value and information more seamlessly. But we saw this explosion in this diversity, and think of like the Cantons, the Ethereums, the Solanas of the world. And now there's this coalescence around what are the real blockchains that are driving true adoption in the institutional space. So from an institutional perspective, what I see is a gradual narrowing of the playing field of what players are going to thrive, what chains are going to thrive, and what assets and applications are going to thrive.
How does Layer Zero factor into that landscape?
That's a great question. I appreciate that. So I think generally what we've seen and the risk that we saw in the space was that with this emergence of different blockchain ecosystems that have emerged, people started to develop discrete third-party applications to transfer value between those networks. And we felt that that was just not the right way to do it, because there was a centralization risk and other risks that came along with that. What we built at Layer Zero is an omni-chain messaging protocol. So what that allows for is asset issuers like the PayPals of the world, the Paxos of the world, et cetera, to create and own their own bridges between those chains so that they can distribute their assets to any customer on the planet. And really, the first product market fit that we saw was the explosion of stablecoins, of course, and I'm sure your listeners know all about that.
Absolutely. How much capital are you seeing move across your network?
So in general, since protocol inception in 2022, we've facilitated the secure transfer of $280 billion in assets. And just last month, we facilitated $8.5 billion in value transferred, which represents a 20% month-over-month increase from the prior month.
Talk to me more about what your company is doing with Better Money technology.
Better money technology is something we are really passionate about. We believe that blockchain, if used correctly, can actually represent a step change in the way that the world works and trade and finance work. And we believe that Layer 0 is the infrastructure that powers the global movement and exchange of value. And so if you build on blockchain rails and are allowed to essentially reach your customer and have the right secure and compliance embedded within that asset once it reaches that customer, we are there to help. We help customers, we help asset issuers reach their customers.
Let's drill into that a little bit more. You recently introduced Zero, Layer 0's Layer 1 blockchain. What is it and what has been the reception so far?
I'm really glad you asked that, because where we are right now is the reason that we introduced Zero. So for your listeners to be aware, we are launching a Layer 1 blockchain called Zero. And the reason why we launched this is because of where we are, right? NYSE, the New York Stock Exchange, processes 2 million messages per second. And if you aggregate all the major blockchains in the world in terms of their throughput, their transactions per second, Solana, Binance Chain, Ethereum, et cetera, you don't come anywhere near what's needed to re-platform capital markets on-chain. So we created an entirely new architecture that's horizontally scalable, purely EVM compatible, that can scale up to 2 million transactions per second, purpose-built for capital markets trading.
All right, Cameron Neely joining us down here on the floor of the New York Stock Exchange. Cameron, thank you so much.
Thank you, Kristen.
All right, everyone. Well, that was Cameron Neely, Banking and Capital Markets Lead for Layer 0. Stay with us because we're going to have a lot more Taking Stock after this short break. All right, everyone, in part two of this edition of NYC Innovates, Cheddar's Chris Castellino and Einstein of Wall Street, Peter Tuchman, continue their exploration of the history of NYC's Silicon Alley. Let's take a look.
Etsy launched out of Brooklyn in 2005. In 2006, Google opened an office in Chelsea, at the time its largest out of Silicon Valley. A year later, at a New York tech meetup, a 21-year-old named David Karp demoed a new blogging platform called Tumblr. The company established its prominent headquarters at 770 Broadway. In 2009, a location-based app called Foursquare was the breakout hit of the South by Southwest Tech Festival. eventually setting up their primary corporate headquarters at 50 West 23rd Street. And City Hall leaned in too. In 2011, Mayor Michael Bloomberg announced a $2 billion deal to bring the Cornell Tech campus to Roosevelt Island, a dedicated engineering school built to give New York the technical pipeline it never had the first time around. 3 years later, the city launched Digital NYC, a public-private portal built to formally position the city as a tech hub. By the mid-2010s, the rebuild had expanded far beyond media into heavy-hitting sectors like fintech with Betterment and Dashlane, ad tech giants like AppNexus and MediaMath, and a health tech boom led by Oscar, ZocDoc, and Flatiron Health. In 2016 alone, New York tech companies raised nearly $9.5 billion, still trailing the Bay Area, but unmistakably cementing the city as the country's second capital of tech. By the back half of the decade, the tech giants validated the ecosystem. Google expanded through Chelsea and into Hudson Square, while Facebook built out a massive hub in Hudson Yards. The entire ecosystem had diversified past traditional software, maturing into biotech, urban tech, and climate tech, categories nobody was pitching during the first Silicon Alley boom. And through every wave of it, the capital behind these companies kept getting cheaper. A decade of historically low interest rates changed the very math of how fast a company could go from idea to giant.
The speed at which things are brought to fruition are so fast, and they're also a function of the fact that now a tech company can borrow money in size from the Federal Reserve and from banks, enough money to go into R&D, right? That was why we had interest rates at zero for a long time.
That cheap capital didn't just rebuild Silicon Alley, it laid the foundation for an entirely new category of company, driving Wall Street to a level of investor conviction the city has never seen before.
We developed a sector called the Mag 7. AI is a brand new thing. The level of robotics, from the medical industry to all different industries, we've got tons of millionaires, many billionaires, lots of ingenuity and intelligence. The level of things that are being built, new startups and companies, it blows my mind.
That shift from software to hardware has a distinct name in New York now, deep tech. And unlike the dot-com years, this wave didn't just happen. It was systematically built. Columbia and NYU have become the anchor research engines for it. To fuel them, New York State launched a public-private supercomputing consortium called Empire AI in 2024, giving local institutions the computing power required to run serious, world-class AI research. Down in the Brooklyn Navy Yard, a venture platform called New Lab has spent nearly a decade turning a decommissioned shipbuilding facility into a sprawling home base for robotics, climate tech, and material-based science. It's an entire tech ecosystem that a growing wave of New York founders are building inside of today.
Welcome back to Taking Stock. I am Scarlett Sieber, the Chief Strategy Officer here at Money 2020. And today I am so excited because I have the one, the only Farouk Malik, who is CEO and co-founder of Rain, a big, longtime friend of the Money 2020 family. So Farouk, thank you for being with us today.
Thank you for having me.
Absolutely. As I mentioned, you're no stranger to Money 2020, and we are so excited to have you back. We have a big announcement today, which I know everyone is eagerly anticipating. But before we get to that, what are you going to be talking about in Vegas in October?
Yeah, we're really excited about talking through the upgrade of the financial system using stablecoin and tokenized money infrastructure. The last few years at Money 2020 have been about the curiosity that institutions have around stablecoins. We're starting to see adoption and actual use cases being built out, one of which we're talking about today. And we'll be looking at unpacking a lot more of that at Money 2020.
We cannot wait for that. Well, I love announcements. I always love announcements. We have great announcements at the shows in Vegas, around the world, but we're making an exclusive announcement here today. What is the announcement, Farouk? What's the partnership announcement that you're going to tell us?
Yeah, we're really excited about announcing the Rain partnership with Western Union for the stable card product, which is a stablecoin wallet linked to a payment card infrastructure. And we're powering that infrastructure through the back end. And we're really excited about working with the Western Union team as they roll out this new technology type to their customer base.
That is extremely exciting. And we are, know the Western Union team very well. Of course, they announced their launch of their stablecoin in Vegas last year. So love to see the evolution of that with what you're doing with them. For those of the people who are watching who are not deeply embedded in the industry like yourself and myself, what does this mean? What does this change both for Western Union and for Rain?
Historically, large legacy companies that have been around for a long time, Western Union has been around for much longer than most other people. I think they're the 18th oldest company on the New York Stock Exchange. The fact that they're exploring stablecoin infrastructure as an early adopter should demonstrate that the technology has crossed the chasm, right? With regulatory clarity coming in with the Genius Act and MiCA in Europe, we're starting to see a lot of large enterprises explore, what does this mean for our business? How do we access opportunities that we wouldn't be able to access otherwise? How do we drive efficiencies that we wouldn't be able to access otherwise? And that's really the amazing part of this partnership. And this is what sort of this partnership also means.
You know this industry better than most. What does things like this mean for the broader industry of where payments is going?
Look, I think if you look at companies like Western Union, they've taken 175 years to be a global business. What we're starting to see is companies are going global earlier. They're seeing adoption earlier. Many of the largest companies in the world, whether it's fintechs or marketplaces or otherwise, or even social media apps, they're global platforms. And so stablecoins are the native currency for a global customer base. And we're starting to see a lot of that adoption coming through in the numbers.
Yeah, that's really exciting. Speaking of numbers, I have loved to watch Rain's rise, if I may say so. 30 times growth last year. That is insane. 30 times is not a small number. You process transactions in over 100 companies, to your point on the globality of all of this. What does, sitting here as the CEO and co-founder, what does Rain look like 2 to 3 years from now, if you could project into the future?
Look, our thesis has been that money is changing whether we like it or not. And that means that all financial infrastructure has to get upgraded. That means that every institution that deals with money, earns money, sends money, spends money, needs to upgrade their systems. And so we feel like Rain is best positioned to take advantage of that opportunity and be the partner that most companies will look to say, hey, I need support with this. How can we turn it on? And a big part of what we've been focusing on for the last several years and even now is about that breadth of use cases, right? So Rain has been about how do we add as many different use cases to our infrastructure as possible so that we can demonstrate the efficacy of the actual technology and be able to drive value for our customers immediately.
That's very exciting. I know there's a lot more that you have to come between now and October. I can't wait to keep hearing about the great news that's coming out of the Rain team. Farouk, thank you so much. For all of you, Farouk Malik, CEO and co-founder of Rain, big partnership announcement with Western Union. We're seeing this convergence of TradFi and DeFi continue. There's going to be more to happen in Las Vegas in October. In the meantime, back over to you.
That's going to do it for us today, everyone. Thanks so much for watching. We'll see you back here tomorrow on Wednesday with more.